Hey everybody, welcome back. Tonight's going to be super technical. We're going to get into the question of did we bounce, did we not bounce, is that the end of it, why it might be, why it might not be. Frankly, I'm going to just give a spoiler alert. Nobody knows, but you are seeing some signs, so we're going to talk about them. Here is the breakdown that you had on Friday that led us to Sunday and selling down. Then we have Monday, Tuesday, Wednesday, and Thursday marked off in the S&P 500 futures market. We can see the higher highs in the same area over and over again. In this area, you were pretty much unable, whether it was on a Monday, Tuesday, Wednesday, Thursday, unable to get over it. Now, we have the high, then you have a lower, then you have a high, then a lower, right? So you don't really get anything down here, except you could say, well, this was the bottom, then here, and then we're trying here. The one thing that I think you can take from this, and the one thing that I think is important, is if we start changing the time frame of this, is you start to get a better picture of what's going on. I do like the idea that you came down. I would have liked to have retested this. That would have made me feel a little bit better about this. But as we start elongating the time frames here, you can start seeing a little bit more of a structure. And by the time you get to that hourly after today, you could actually say that you pretty much have a wonky W sitting right there. Is it accurate? Yeah, I think it's accurate. I think it's something we have to pay attention to. We went through this yesterday, and I just want to show you a couple things. We went through this on yesterday where we talked about the equity risk premium and what's going on out there. My only concern with the market and the futures market is you're actually overbought already. So you're back to this area, and this is the RSI. I'll clean all this off. And again, as I stated, this is going to be a super technical one, but you're right back to the high on the RSI. And usually, just for point of reference, when you're up here on the RSI and you're hitting a level like that, it's not an optimal spot to go and take a look at buying. So if we were just to go here and just mark these off and put an RSI every time you're near that 70, and you can kind of get a sense of what that looks like. These are not optimal spots. Can you go higher from there? Sure, but have you gone higher from there since you've been hitting since June 10th or 11th? Since those days, even from July? No. And as you go through it, you can just see them over and over again. I'll mark a couple more just so you can see what I'm talking about. We'll go out to May here. I can actually just grab that one right there. Well, now I'm in that drawing mode, so it looks like we're not going to be able to do that. But if you just go here and you just mark them off, you can see really clearly that they do tend to set peaks. That doesn't mean that you don't go higher, a couple days later after it works it off. But the question then begs, is this really the area where you need to be adding? I think you need confirmation. And considering the amount of damage that's been done in a very short period of time, I don't think it's the end of the world to wait for confirmation. I did very little today, did a couple trades. I had a short bias all day, frankly, just because looking at the market in and of itself, there's no way that you could be looking at this and just assume that we're going to break through here. You are seeing some structure, and we did see that at the end of the day. There it is on a 4-hour. What I do like about the 4-hour that's a little different than the hourly is here's the undercut on the 4-hour, which you held on the RSI. I use RSI a lot for overbought and oversold, not so much to move, but just to tell me about the market and where we're currently located at. I find it extremely helpful. Now, Saturday's video, we'll get into all the details like equity risk premium that we went over, and we talked about that and what we're seeing with the equity risk premium. But I think it's important to note this, just the simple things. And I tend to look for these kinds of divergences that obviously you have right here. For example, you have the lower low, and then you have right here, even though you made the lower low, the RSI didn't. And to me, that's a divergence that you want to pay attention to. And this took a long time to get here to make this divergence. What I do like here is that you are over on the 4-hour and then you are over here. So I actually am moving higher even though I'm even. So that's actually a positive divergence off of this one. 4-hour trumps the hour. And then obviously the daily trumps all. And then you can see your bounce here and these bounces. And this is exactly what I was waiting for, candidly. I am not the person that's going to be first. I have no interest in being first. I'm more interested in getting the direction, and then after I have the direction going from there. So let me mark this off, and then we can kind of get a sense of that. I thought I was still in drawing mode. But I'll mark these off for us, and then we can talk about this in greater detail. As I stated, this is going to be super technical, and I think that's the way to go. We're going to discuss the macro and the fundamental issues this weekend and talk about equity risk premium and what smart money and dumb money are doing, especially in regards to smart money, because they're going to give a signal probably by tomorrow, according to when I looked at the smart money chart. But we'll go over it on Saturday in greater detail. The goal for today is to get everybody prepped for tomorrow. So if we take a look right here, 1, 2, 3, 1, 2, 3. It's not rocket science. Don't overthink it. The important thing about this, from my perspective, does it mean that it's over? You never know. What you do know is this. You held this level right here and you finally turned up. And today was the day that you turned up. And I think that people need to realize that. So when you're coming into today, and this is what people kind of have to realize, you're coming into today and this is what your chart looks like. And this is when people will really beat themselves up, I find. And you shouldn't. So if you were looking at your chart, and this is why I'm saying that, if you're looking at your chart, and here's your RSI, and technicals can only do so much, but this gives a great example. Here's Monday. Now, if you come into this and you're a technical trader, are you getting involved there? And the answer, you could say, well, I'm going to play this bounce. Maybe, maybe not. And then you just look at the next 2 days and you would go, okay, well, here's Tuesday, here's Wednesday. You don't know anything. The idea that you're going to buy that bar in the hopes that you gap up after all the rhetoric that you have between the Middle East and what's going on with Japan right now is just ludicrous. So now if you let the thing play out, people are going to look at it and go, oh, it was so obvious. But candidly, anyone that's saying that is just full of nonsense because you couldn't possibly look at this and go, and I'll slow it down so that you can see it, but you couldn't possibly look at that and go, oh yeah, no, we're definitely going to hold there. There's literally no way that you could look at that chart and think that. Fast forward, and here you are. A different day, a different chart. This is why I love technical analysis. Let them tell you what it's going to do, and then you can act. Now, can you work off of this? Yeah, you're getting some stuff here you can start to think about working off of. We're going to look at some of the sectors and some of the drawdowns that we've seen in some of those sectors and go from there. Do I think we're out of the woods? I think you've got, at a minimum, you have sideways action. You have to realize that if we look at the simpler things like here, and again, super specific, super technical tonight without getting into the fundamentals, this is a 3, a 5, and an 8 on a chart. These are your declining moving averages. When are you flipping? Well, you need the stack to change, right? So I have red up top. Red means stop, right? So I need this green to get above there. By the end of tonight, if it just stays here, you'll be there. But I don't know that I'm getting above that breakdown. Now remember, this is where the yen imploded and we had the issue with the US dollar versus the yen, and then Japan imploded. So I don't know that we're going to get through that. I do know that at a minimum here, you're starting to base and you're starting to go sideways. And this is really important. Now, if we drop this down, do we have anything that we could really work off of? Well, there's a couple things here that are interesting to me. Number one, this is more troublesome than a sign that you need to be getting involved. Bitcoin just up 10% because just screams short selling. And people buying the ETFs now, and now they have to get in, right? Again, nobody wanted to own it on Monday at 48, but at 60, it's a screaming buy. $12,000 more per Bitcoin. This is where you have to buy it, not here. Don't get me started. When you start to see this kind of stuff, this does give you some issues, meaning, do you really want to be that person? Do you really want to be the person that's buying that into this? That's not really how I trade. If that's how you trade, I wish you the best, but there's nothing technical here that would tell you that now you have to get in. Now, somebody will tell you after the fact by looking at it like, oh, I saw this and then this. It's the same nonsense from yesterday, and I'll show you what I mean by that. If you click over this and I get over all my averages, this is exactly what I mean. So you break down here, then you have your sidebar. You make the higher high, you reject the higher high, and you break. So the premise that this time it's really going to get above a higher high and go is just nonsensical. So when you start to think about it like that, you just use general logic, it doesn't make any sense if someone's saying that this was very easy. So why am I hammering that point home tonight? Because you're going to go on social media and all the people like Freddy Fingers that live in their mom's basement eating Hot Pockets are going to tell you how easy this was to predict. And I'm going to tell you, as someone that's been doing this for over 25 years, there was nothing easy about this. You can see your framework right here, and that framework is now defined and solidified that you have that declining wedge. You stayed in it. Now you made a higher high on it, so you can utilize that as levels to see if you stay in there for Bitcoin now, but it is what it is. For me, is this an area of interest? Not really. Usually when you have a day like this, there is a follow-through day. It's not really my trade considering what we're seeing going on out there. And again, we're going to talk mostly about the indexes in and of themselves, but I thought that that was worth paying attention to. Rotation, rotation, rotation. And so one of the key things that we keep hearing about is, are we rotating? Well, I would take a second and say, yes, we are rotating. And then people are saying, why are you looking at regionals when tech's up? Here's Monday, and you made a higher high. Tuesday, you made a higher high. Wednesday, higher high, and a reversal because Bank of Japan is going to raise rates, then they're going to cut them, and they're not sure. And then we had peace talks in Iran, and then we didn't have peace talks in Iran. And at the end of the day, 1, 2, and now 4 days higher. If you go here and take a look at something like the SOX, and say, okay, well, what is the SOX doing? And you would go here and go, well, here, then here, then down, encapsulating that day, and then a reversal. My problem with the stocks is that they just trapped you. In other words, why are you up so much and why did it push? Because the people that shorted here came in today and then you were up. So anybody that is looking at this right here, just so we're clear again, and it's really important to get this, if you are looking at the market and you are below this level, which is a big demarcation line, and so you're below there for 3 days and you're looking at this going, okay, well, I'm below that, and then you get this day and you're going to go long semiconductors off of that. I wish you the best of luck. But there's no way that you could be taking out lows on semiconductors coming into today and then say to yourself, oh, this is going to happen. Okay, so you got to give yourself a little bit of grace here with this market. A lot of people are beating themselves up over it, and they really shouldn't. It's just the nature of the beast, especially when you're in the situation. And we're going to talk about the VIX and some of those readings in a second. Now, is this a place of interest? It is. Are you going through short covering or are they buying semis? I think that at this point, it's not going to matter as much as what happens tomorrow and what happens into the close tomorrow. So the first thing that you're going to want to watch, your first real data point, if you take nothing else from this video, you need to watch Friday's close. You're obviously going into NVIDIA next week, and you're obviously going into earnings on NVIDIA next week. We have no idea how that's going to go. They have some explaining to do, obviously, with the Blackwell delay. And now there's supposedly 2 chips. We're going to talk about that in a moment. Looking at this, you can't beat yourself up over this. If I'm going to go look at the home builders now and say, okay, well, what about the home builders? I think you're fine. I mean, the home builders really haven't come down that much. All right, are they still rotating into utilities? Utilities are still sitting at the highs. How about XLRA? Did they stop buying REITs? No, you're still right here at the close. As a matter of fact, if you look at this close, it's the 3rd highest close you've had in 52 weeks. So when we start saying that we're rotating back into tech, is that what we mean? Or do we mean that they just short covering tech? I would say that you're going to want to see a little bit more to convince yourself that they're rotating back. Are there signs that, yeah, you could be buying tech here? 100% there's some signs that people are putting on some risk. There's definitely some signs. You're holding right here, but if we look at the simple moving averages like XLK, you can't even get above a 12-day moving average, which is the white. The 55 is right here, and it's pointing down. So can you bounce back up? Sure. Does Microsoft look like something that you have to jump into right now? It can't get out of its own way. Microsoft's one of the largest names out there. Now you could take a look at Apple, which is obviously trading at a discount to Microsoft on a PE basis. And you've had some strong buyers, right? You've seen that. You've had some buyers out there, and I think that's really good. You've had some of these other names that are in XLC that are holding as well. And I think that's good as well. And you can see that we've gap filled. But that gap fill takes you back to what? The same spot we just were. So are we just gap filling before we roll over again? And the answer is we're not going to know until we know. But you are at a demarcation line, and what I would do is I would use that ES level that I pointed out earlier, and that would be my demarcation line, and that would go from there. Another thing you might want to watch is things like Charter. Now, for me, Charter was fascinating because you ran all the way up, they backfilled, and then today you have this really nice close. So they're giving you a really interesting location right here to get involved, but you have no buying because it's not one of those top tier names. That said, it's a really pretty cool spot to take a look at this chart and see how this is going to play out tomorrow, that's for sure. So it's definitely one that's going to be on the radar. The question is, what do you need to look at? So these are the things that I've been focused on, and this is where I think you should start. I don't think you really need to worry so much about the bond market and what's going on with TLT. I think you need to just say, are they unwinding their puts? And there are definitely signs of that today, for sure. Now, if we start with the VIX, you have the huge move up, the drop. But what we've been fighting for a very long period of time here is this level right in here, and I'm just going to drop that to that 25, so you can just see where 25 is. And what you were doing here is you were battling against it, flipped up, over, flips it, and then you've been riding that line. And at the end of today, you clearly broke below that. So that's getting us back down into that 7 where you were on August 7th versus the 8th. And you care about this because it means that they are taking off their hedges. See, this is the one thing. They want to put options and ETFs and all this stuff on the VIX. We just want the VIX left alone so that we can actually see what they're doing. Right? When they start masking it with all these other ETFs and everything else, it gets harder to actually read what's going on out there. In this scenario, the only reason the VIX goes up is because they buy puts. It's pretty straightforward. When they stop, it starts imploding. Once you're under 25, those vicious moves stop. Now you just need to get under 20, but you still have a ways to go. This is a start. This is the first thing that I saw today that made me comfortable. Second thing, and this happened earlier, was this 3-month versus 1 month VIX. Now, if you look at this on the weekly, let's just, if they'll let me really do what I want to do here. And if we take a look at this time, what you'll see is here you have October, then you have here the 15th, and then you go to here to the 18th, and then you have the pandemic, and this is where you were. Now, what's important about this is, did you have to buy right away when this happened on the 15th? Did you have to buy that on January 18th? Did you have to buy here on March or February? No. You had time. You went sideways for a while. So it's not as if you're just going to miraculously lift and everything's going to be fine and there's not going to be any backfilling. But when this has happened, if you've looked 3 months out after these kinds of events, if you're buying 3 months after this event or this event, any of these events, you've done exceptionally well. So it depends on your time frame and how you're looking at the market. What you don't want to do is you don't want to be early and then find yourself rejecting against the same spot that you rejected earlier. And that's how I trade, but you should trade how you're comfortable. For me, the biggest thing that I always look at is, what are areas of interest that we were completely rejecting at? And it's the same area over and over and over again. And our hope is that we don't reject here on Friday as we rejected Monday, Tuesday, Wednesday, and Thursday to get above this area. So before we get all giddy, let's see if it actually does get above there, and then we have something to work with. Other signs that you could be getting above there is the put-call ratio on the SPY. We needed this to trigger, and it did not disappoint. And I think it's worth pointing out here. So what we were looking for and talking about while this was all going on is there was no panic. And you can see in here that just the other day, we finally got some readings in here. It takes a day to get these readings. So you have it by Tuesday, really, even though it says that it's in here. It comes in around Tuesday, like a day later. But you're right around that 172, okay? And then you go to these other times, well, that's what happened in mid-October before the bottom was in. And if you go take a look at March and you go take a look here in May, these are all demarcation lines from like, oh, that's a big reading. That's a level where we could look at and then say, yeah, they panicked and they bought puts, and therefore that is a sign that you are putting in some kind of bottom. Now, I thought this was somewhat interesting too. We're going to go to the 5th, which is Monday morning, and watch what happens. So these are 40 sectors. And what we're going to note about these sectors is what has been going up this week while this is going on. And you can see block has been moving, but this is on the 8th. And if it stayed here, it wouldn't have done this. But obviously with Bitcoin up 10% today, that's moving. The pot names moved right at the end of the day yet again. But semiconductors. So if we start looking from Monday on, what are they buying? Semiconductors, IYT, which is transportation. Then you have the solar names, XOP, energy, China names, IGV. Well, it's almost like, and then you have the AI names, XLK, cloud. Well, if you start looking from here on, it's almost like they're putting the band back together, meaning what was working before, are they really buying that again? And this is important, so watch this part. Now, one core thing that we all know about is July 11th, and we all know that July 11th is extremely important because that's when that month-over-month number came out. It's actually the high of the USD Japanese yen trade, but if you look at what happened in here, this is RSP and this is the S&P 500. And we had this huge demarcation where we were breaking down, lower lows, but this zero line on RSP was never broken. Well, you broke Monday, and then as time went on, you broke again on Wednesday. And this is really the point that I want to get across to everybody. If you're getting whipped around right now, you're not alone, right? And so you have to realize that this is not an easy time. Because not only are you trying to figure out when the bottom drops, you're trying to figure out when you're supposed to get back in, if you're supposed to get back. And you're not going to look at Wednesday's market and say, oh, we clearly should have bought. It's just not going to work that way. So give yourself some grace with this stuff. Now, if you take a look right here at how this is playing out into Thursday, you're trying to rally and you're sitting right here as well. But before I go to the next chart, this is your zero line. And the one thing we said yesterday is that when we broke this zero line, we needed to be very, very careful. Because by breaking this means that everybody that was buying the equal weight market, they were down. And they were down. And if we take out this low, we have problems and there's going to be more selling. That's not what happened, but you don't have anything definitive yet. You did not take out that low. That's true. You're still above the zero line on the RSP from July 11th, which is where we started to see this divergence, right? Okay, now watch this. We flipped, and we flipped today. So again, if you didn't catch this, that's fine, because it did not happen until today. But you're flipping. In other words, they're not so interested in the equal weight market anymore. At the end of the day, what happened? This is 359. We all know market on close at the end. So if we look at RSP, and RSP is flat at the end of the day, and the SPY is up, what does that tell you? They're buying the larger cap tech names. They're buying the 7. There's no other way that the S&P on the market cap side is going to outperform if the RSP is here. So what we're seeing is we're seeing what they refer to as, you could say, re-risking, regrossing, but you are buying some of these names. You are starting to buy some of those names again. That's the good news. I'll tell you something that I did find bothersome and that you need to watch more of. Lilly absolutely crushed. And what I don't like about today is the fact that you couldn't find any footing. Meaning, I made money buying puts in this thing today of all things, and that's not really what should have happened here. I'll take it, but what really should have happened here is not the most selling that the name has ever had in 2 years, but what should have really happened here is it should have held. And what you did was you got right to that 55. And when you got to that 55, you rejected. And that's not ideal. I would have preferred this to at least closed over the open, and you didn't do that. So for something like this, we'd like to see it rebound and try to hold in there. What we are seeing, though, is some of these tech names that are AI associated are starting to hold. And I think that's good. So for example, here we are on earnings, and this is earnings, and the stock obviously pummeled, then it pops back up, and you have that little island. But look at what's going on here today. So some of these names like PLTR, you are seeing some buying coming in there. If you look at this on the weekly, that's an enormous move on the weekly, and that is a lot of money behind it. What we need to see tomorrow, again, and I'm just going to reiterate this, there's a couple things you want to see. The first thing you want to see is you want to see the S&P outperform. You want to see the S&P outperform RSP. The other thing you really want to see on the stocks more than anything is you want the stocks to close above this level. You really want the stocks to close above that anchored VWAP. If you could pull that off, that'd be great. Now you have some news with Tesla and robo-taxis tomorrow. The only thing I would say about that is I don't think that's going to be our driver, because that can't even get above $200 on that news. You had one bar on Monday, and that was it. So if that's not going to be obviously a driver, the other thing that I would really focus on with the S&P is watch the close. I'm going to clean all this off for a second. You're going to want to watch the close on the S&P on Friday. You want to see, are they going to sell more? And Fridays are usually when the future traders sell, because if they didn't sell by the end of the week, they have to get out by the end of Friday. That's why Fridays are so important technically. There's actually indicators built just to determine what happens on Friday. So you're going to want to watch Friday's close, because if you look at some of these closes on Friday before, some of them are dojis, and some of them that frankly, they've just been absolute dumpster fires where we've fallen apart. So we need to watch the close on Friday. That's it.